welcome back to Grok Trade, everybody. Caroline Alizan here, graduate student of the Grok Trade Mentoring Program. It is Thursday, October 13th, 2011, and we are looking at the QQQ daily chart. So let's do some technical analysis here today to help us better understand what's happening on our daily chart. So let's take a look at what happened here today. We are beautifully tagging that 57.19 mark, this significant area of resistance again today. This is a second test of that upper area of resistance. The first one was right here yesterday, tagged, it pulled back down big time, forming that shooting star formation that was never confirmed. All right, we never confirmed it. We never closed below the low of yesterday, below the 56.56. So we are still trying to push it all the way up and continue higher, but we are stuck at this 57.19 mark again. So put a line at the 57.19 and watch it really closely tomorrow, because it's a significant and very important area to watch. All right, so that's what you need to do. And the other thing that I see here happening is that we could be forming a high base at the top of that rally, but in terms for us to call it a high base, we would still need one more candlestick up here trading inside that tight trading range at the top of that up leg. So between the high of yesterday, the 57.23, and the low of today, the 56.43. So that's what we would need to see happening tomorrow if we are about to form a high base. And from then on, we will need to wait for a breakout one way or the other. High base formations are more bullish than bearish. So really watch tomorrow and look for that candlestick to be here trading between the high of yesterday and the low of today. That's important, and then that would be considered and called a high base. So that's what we could see happening. So if we ever go higher, we'll have to pay close attention to that next area of resistance on the way up here to 57 about 78, and then the next one up the 58.33, the next one right above it, the 58.78, and then the one up here to 59.27. So pay close attention to all of those if we ever continue higher. But if we do not, if we instead hit that 57.19 again and pull back down, first of all, we will need to break through the low of today, the 56.43, and then the 200-day moving average, which you see here in blue, and it's at the 56.26, because it's a significant area of support right now. It's a pretty tough wall to break through, but we'll have to do it if we ever wanted to continue lower. So that would be the first one for us to break through, and then once we do that, the next one down would be at the 55.85 mark, and the one right below at the 55.46. So watch all of them, because they're all significant and very important areas to watch. And the other thing that I see here is that according to the MACD, we are continuing higher. So we are rising on the MACD. We are still above the zero line, which means that we are still bullish according to the MACD, continuing higher. So pay close attention and watch that little guy really closely to look for confirmation. And the thing that I did not really like, again, I will talk to you about that again and again and again, because it's really important, the volume. We are having the update here on really light volume, which I don't really like. I don't like anything that trades on light volume. Really remember that, because it's really important. So whatever we do here tomorrow, you'll have to confirm it with the MACD, and then also look and see some confirmation in volume, some increase in volume. All right, so that's all that I have for you for today. Safe trading to all of you guys there,